It is now 9 p.m. And I want to welcome each and every last one of you all to BYOB Market Talks. So let's see, let's go ahead and get this screen share. All right, master traders, it's pulling up. It should be pulling, you should see it in a minute. All right, here we go. If this is a little slow tonight, we got some supposedly really bad weather here. So bear with me. That's what the issue was even earlier today. Just got some really bad weather in the area, but we're gonna make it through this. But as you're still logging on, go ahead and drop it in the chat as this is pulling up. Still drop it in the chat. Let me know where you're calling in from. Where are you calling in from? Definitely want to know that. So all right, good evening, good evening. Okay, here we go. All right, so I want to know who is on the call. Welcome, ATL, welcome. Hey, London, UK, Dallas, welcome. Canada, welcome. BYOB Worldwide, San Francisco, welcome. Welcome, Florida, welcome. So I want to know, San Francisco, welcome. So I want to know if drop a 111 in the chat if this is your first time to BYOB Market Talks. I want you to drop a 111 in the chat. If you are just learning how to cash out, you are learning the BYOB cash out, and you haven't begun cashing out on your own, you're still learning how to cash out, go ahead and drop that 222 in the chat. Go ahead and drop that 222 in the chat. So go ahead and welcome to BYOB Market Talks, and welcome back to those of you all who are back and still learning how to cash out. So where I want to begin, I don't want to mark on this because I want to talk about this. So we go. You always learning, so 222. Hey, I'm with you. That's okay. I am with you. And I got a Chicago, Illinois with a 222. So, all right, 222 in the chat. Welcome. So what I want to do is let's talk about this BYOB cash out. Let's talk about this BYOB cash out and what it is. Okay, Alabama, welcome.
Oh, no, you go.
All right, so let's talk about this BYOB cash out and what it is, because I want to make sure everyone definitely understands what the BYOB cash out is, okay? I definitely want to make sure you definitely understand that. So the BYOB cash out, and I'm gonna slow it down a little bit more than I do in the mornings. So so what the BYOB cash out is it uses 3 indicators, okay? Let's see if they have something a little closer to the end, and they don't. So it uses 3 indicators, okay? It uses 3 indicators. So now here we have the stochastic. I have my Hikinashi candles, and I have a PSAR, okay? Even for now for a buy or a sell. Now, we're gonna, whether you're looking at the, doesn't matter if I'm looking at, well, if it's just a currency that I follow, because some of you all will grab a currency pair and you'll say, you know what, I follow this currency pair. This is what I'm looking for, right? I just follow a particular currency pair. And then you have others that actually will use the alerts that come from the vibrata or wherever you get it from, okay? But what I want to make sure, and I'm gonna move this because this is a support line, but we're not gonna focus on that at this time, okay? What I want you to focus on is the actual stochastic, okay? Focus on the actual stochastic. Now, the stochastic is a leading indicator, okay? This is a leading indicator. So you always begin with the stochastic first, okay? You begin with that stochastic first. So when you begin with that stochastic first, that means that I'm looking for that curve around the 80, or I'm beginning for that curve around the 20. Now, we're on the 15-minute chart. So I understand that some of you all don't like to, you know what, some of you all, let me say it like this. Some of you all want to trade on higher time frames. Everybody's not a scalper. You'll begin to understand the type of strategy or the type of trader that you are, right? That's what you begin and you begin to understand the type of trader that you are. But the foundation of the strategy, where we always begin, is right here on the 15-minute chart, okay? You don't have to stay here, but this is where you learn from. Now, and that's 10 pips and cash out. Now, why is that? Just like I just had a support and resistance line here, but when you first begin trading, you don't even know what that is. So we want to tell you that you can get your 10 pips cash out within your first 14 to 21 days. You begin building your skill set. You begin building on your knowledge. You begin building on all of that, and you go from there. Now, your stochastic. This is a leading indicator. These two are lagging indicators. So leading indicators, that means that I want to look at that one first, okay? I look at that one first. So I need that curve. If you notice that, okay, you know, oh, this one is actually got a curve now. It didn't have a curve a minute ago. So, but I also don't have the candle. So let's focus on, because it's very, very important that you want that curve. Now, you notice that I have a curve here. You notice that I have a curve here. You notice that I have a curve here, okay? Now, someone actually, well, let me stay here first. So this stochastic, the blue line cross over the red in a downward momentum, blue line cross over the red in the upward momentum, blue line cross over the red in the downward momentum, okay? So you just kind of see how that stochastic, it curves. Blue line cross over the red, downward, blue line cross over the red. Setting up for a buy, setting up for a sell, setting up for a buy. That's where I need your mind to go. Setting up for a sell, setting up for a buy. That's what I need you thinking at all times when you're looking at the stochastic. Setting up, setting up, setting up, right? Does that mean it's a buy? Does that mean it's a sell? No, because I cannot base it just on the stochastic. Now, what am I looking for next? I'm actually looking for my Hikinashi candles. These are trend candles, okay? They're trend candles. So they're like they're like a translator. They translate for the Japanese candles. So they interpret, they translate. That's what they do. So you don't have to try to figure out and read what the Japanese candles are saying. So let's see here. When I look, what I'm looking for is a red candle with a flat top. I'm looking for a sale, a green candle with a flat bottom for a buy. That's what I'm looking for. So now that I have this red candle with a flat top, the last indicator is this PSAR. This is a reversal in the market. So I need that PSAR to flip to the top. So when that PSAR flips to the top for a sale, then you notice I put this arrow here. So as we flip charts, then you have that visual, okay? You flip charts, you have that visual. Now, with this visual, you notice that everything is on the top. So I have my stochastic on the top, red candle with a flat top, PSAR on the top. That set me up for a sale, right? Then I have my stochastic, blue line crossover in the upper momentum. I have my green candle with a flat bottom, PSAR on the bottom. Now, I want to use time frame confluence. I do want to show you this because I got it to pull up. I had the question earlier because someone asked me about the currency strength indicator. Looking at, matter of fact, let me just go back so we can make sure I have the currency. This is AUD, NZD, right? So we're on a 15-minute chart. So I want you to look, when you're looking at this, okay, I know a lot of you all use the currency strength. So, and you notice this is web analyzer, imlwebanalyzer.com/CSA/. Now, 15-minute chart, okay? What I'm looking at is AUD, NZD. They're almost equal in currency strength. Well, NZD is a little stronger, okay? And we were looking at it, so of course this is not live data because we're looking in the past. But can you use this? Yes. But what I want you to remember, why do I look at time frame confluence over kind of looking at this, you know, is because the market feeds this. And so this kind of has a lag in it too, right? Because the market actually feeds this. So, but can you use this? Yes, you can. So I don't want to, you know, because yes, I did pull this up, but you know, it's still valid. You can still use it. I'm not going to tell you, no, you can't use it. So let's just say if I was looking for a sale and this was live data and NZD was here, you know, could you use this? I mean, yeah, absolutely. Look at what NZD would be strongest right now. You see how this one actually switches and changes and it kind of tells you. So if you want to add an extra confirmation to give you that comfort, then don't not use the time frame confluence. Make sure you use that. But this can give you that added comfort if that's what you're looking for to see what's strong in the market. Because I'm about to talk to you about the strength of what's happening in the market. So yes, this is something, but what I don't want you to do is use this instead of looking at what the market is telling you. I don't want you to look at this over what the market says, because the market is the strength, the market is going to feed this. So if there's something happening or something's changing or something's shifting in the market, it's going to happen in the market before you see it here. So just understand that. But this is still valid. I mean, it's not going to be that much of a lag, but it's still going to happen on the market first. So I just kind of want to stress that. So just like we just had news that just passed at 8 Eastern, yeah, news that was at 8 Eastern, and so you can kind of see the reflection of what happened with the news. So so what does news impact? So it was NZD, I believe, but NZD hits the AUD pairs too. So you can kind of see the strength and what kind of happened with those. So just kind of wanted to highlight that, you know, when you're looking at the currency strength indicator, just remember it feeds that. So you can add that as a confirmation if you want to. Just don't ride that over what the market is telling you. So you can add it, you know, just don't get into analysis paralysis when you're trying to take a trade. Just, you know, just don't do that. So now I want to go down to the 5 minute, okay? Go down to the 5 minute. And when I go down to the 5 minute, you notice that this is selling, okay? This is selling. So that's what I want to be happening. And then when I go to the hour, my confluence on the hour, if I can find it, my confluence on the hour needs to be selling, okay? It needs to be selling. Now, you notice that it's changing. It was red, got a little pullback, and now it's kind of like that doji, okay? What time was it when this happened? This is where your patience comes in, right? It's about 30 minutes to the next candle. Can I wait to the next candle? Can I wait 30 minutes to the next candle, or do you just go for it? You know, time frame confluence tells you to wait. Do all of you wait? I know you don't, but time frame confluence, I'm giving you the foundation. As you get comfortable with a currency pair, as you get comfortable understanding the market, then you'll understand. Just like if this was a GBP pair, I would be telling you, hey, let's check the 30 and see what's happening on the 30-minute, because GBP is an exception to the rule, right? GBP will tell me that I can go down the time frame because of the amount of liquidity in the market, right? So GBP would let me know that I can actually go down because, you know, see how this is only 10 pips? That might be 50 on a GBP pair. That can be 30, you know, on a GBP pair. So GBP, I know I'm gonna get my pips. Like I know for a fact I'm getting my pips on a GBP pair. So this is where your patience and discipline kind of comes in. Now, understand it. And the reason I have this up, so and that's really how that works. Now, the reason I have this up is because, of course, tonight on Thursday nights we take trades, right? We take trades, but as you notice, the market, you know, some of you guys cashed out, but this is a trade we marked up and we were looking at this morning. Look at the sabbatical the market's been on, right? Some of you guys cashed out. That's awesome. There were opportunities out there, but the market has been slow. Now let's talk about why. So the president gave a speech today. We've been talking about the news. So there's been a lot of talk. Brexit just happened. It hasn't even been a full week. So, you know, before we got to Brexit, we were talking. So they have some back and forth about that. So I don't want anybody to be scared of the news. I don't want to intimidate anybody with the news, but it's very important to understand the news, right? It's just very important. You don't trade the news unless you know how to trade the news. Tomorrow, okay, I definitely will. Tomorrow is non-farmer payroll. That happens on the first Friday of each month. So that slows the market down because remember, we don't move the market, we ride the wave of the market, okay? So that's gonna slow the market down. So tomorrow is gonna be an extremely profitable trading day for you all. So you're gonna, if you, once it hits, that is, once it hits, I'll go back over it, I will. Once it hits, it will be a very good, it will be a very, very good trading day for you all. It definitely will. But you know, you see it's at 8:30 in the morning. So once 8:30 hits, don't trade at 8 o'clock. You trade after the news. And you, cause you wanna know how does the news impact? So, right, you don't wanna, like they had news, so let's look at this, okay? Now, when you have the news, right, this is what has all of them haven't updated. But when we're looking at the news, this was the news that just hit, okay? And so they'll give you what they're expecting, right? This was what was previous. Then they'll give you what's forecasted, and then they'll give you what it actually is. So if it's positive, then that's great, right? That's positive news, and that's gonna push the currency in a positive direction. If it's negative, it's gonna push the news in a negative direction. It doesn't always work out the way if you notice, they have a forecast and then you got the actual, right? Negative, right? So you got a forecast and then what is it gonna be? So you don't know what it is gonna be. So you don't wanna get caught up in that because news spikes the market. News will spike the market. But after news, that is the news is your fundamental analysis. But after the news, the market corrects itself back to the technical analysis. So the market is gonna pull back to what it was supposed to be doing. And when it pulls back, you can trade it back to what it was supposed to be doing. So you don't wanna get caught up. Like, let's say it's supposed to be going one way, you think it's gonna go one way, and it goes the other way, then guess what, right? It didn't work out in your favor. So that's why I always tell you, if you don't know how to trade the news, don't be in the news, don't trade the news. So that's why that's so important to understand. So let's say, but okay, understand this. I definitely want you to understand this. So let's say we haven't had a spike in a little while. I'm not gonna find a spike. But like, let's say you want to see, and I'm gonna go back over it in just a second. I got you, I promise. So AUD, right? And it's not just news, but understand it's AUD, and then you have NZD, right? That's your two currencies that's here that we were just talking about, right? Those are your two currencies that's here. So AUD, NZD. So AUD is your base currency, NZD is your counter currency, right? That's your base and that's your counter. Now, if this one is the strongest, then you buy. If this one is the strongest, then you sell the market, okay? Understand that. So when you're looking at this counter, I mean, these two currencies, this is your base. That first one is your base. That second one is your counter. If this one is the strongest, then the market is going to buy. If this one is the strongest, then the market is going to sell. And when we talk about you can buy and sell the market, you are literally buying first and then you sell when you take profit. If you're selling, you sell first and then you buy when you take profit. So that's what you're doing in that movement. But so if you get the news, if like let's say the news is positive for this one, then it's gonna spike up in this direction, right? It's positive for AUD, then the news is gonna spike up and it's gonna go the direction. That's why you'll see it spike in one direction because it's positive. If it's negative for that, then it'll spike in the opposite direction because it's gonna make that currency that much weaker. That's why the news impacts it so much. And so right now, the people who move the market, they're just kind of sitting there like, well, we're kind of waiting to see what happens. So we had a speech by the president, and you had news this evening, but we got non-farm payroll tomorrow. And guess what? The U.S. currency is the highest traded currency. I mean, let me back up. U.S. currency is in every major currency pair. So you got your majors, your minors, your exotics. So U.S. currency is in every major currency pair. The minors, well, GBP is the most liquid. So when you have non-farm payroll tomorrow, we just had Brexit and them over there. We're not going to negotiate. We're going to negotiate. We're not going to negotiate. We're going to negotiate. So you have all this going on. That's why the market is just kind of sitting there like, okay, we're going to wait for y'all to figure out what's going on and then we'll move, because that's where, that's what's happening. So it's what we do is we practice patience, because you think like a bank, act like a bank, and you become your own bank. We ride the wave of the market. And so when you understand that, you trade emotionless, right? You trade emotionless. That's how we're gonna make some money. That is how we become wealthy. That is how we do it. It's just kind of understand what's going on, understand how the market moves, and understand the strategy. So let's look at a different currency pair. You want to look at it. So let's look at a different currency pair. I was asked to go over the strategy one more time. Let's go. Let me look at a different currency pair if this pulls up. And do you have, before I transition into something else, do I have any questions or comments or anything based on what we were talking about? Should have put it on that one. Okay. Right. So.
She asked if you have any questions or if you just not.
So right. No, see, tomorrow, let me go back to tomorrow. You see, this is that news tomorrow, right here. This is once a month. Would I create my own indicator? I created this strategy. All right, so let's right here. And then I want to show you guys something. I'll go over this again and then I want to show you something. if you understand, when you start learning and you understand price action, and then you understand the areas of value in the market, like the areas of value and entry triggers, then you'll understand why this is so accurate. So now the stochastic. So first thing first, it uses 3 indicators. So you got the stochastic, Hikinashi candles, and a PSAR. So those are the 3 indicators that this uses. So when you have this stochastic, it's always gonna flip around that 80 or the 20. It actually does flip somewhere in the middle sometimes, right? It does flip in different areas, but you have that around the 80 and around the 20, right? Where it actually flips, okay? Now you notice like right here, how it's kind of got that flip that's happening. I'm on a 15-minute time frame. You see, this is live. Like this would be what it actually would look like when you're trying to notice, does it have that flip around that 15, you know, around that 80, right? So, but where were we? Okay, here we go. And understand that sometimes when this does happen, look where this is at. Because it's a leading indicator, understand that you're not gonna get all 3 of them to flip at the same time. It's not gonna happen, okay? Every now and then they happen close, but they're not gonna happen at the same time, right? It's not gonna happen. So this blue line cross over the red around, blue line cross over the red around the 80. And then you notice like these are 15-minute candles. So look, it kind of went into a little consolidation, but look at what happened. It took a while for this to happen. And so now you got, this is when we finally got a red candle with a flat top, and then we got a PSAR flip as well. Both of these are lagging indicators, so it doesn't matter which one happens first. You notice I had a PSAR flip first, but it didn't matter which one happened first. So the PSAR flip way before I even got my flip candle, my red candle with a flat top. Typically, you will get a red candle or a green candle with a flat top before the PSAR, but it's not always the case. The candles come every 15 minutes or whatever time frame you're on, but the PSAR will flip whenever the PSAR is ready to flip, whenever the momentum shifts in the market. So if you're on a 15-minute candle, I mean, that PSAR can flip at 14 minutes. The PSAR can flip at 2 minutes. It can flip at 8 minutes. It's gonna flip when the momentum is there, when the momentum shifts. So it does, the PSAR is just gonna flip when the PSAR is ready, right? So understanding that, we now know that I have everything aligned. Now you also wanna highlight that the stochastic is not gonna stay at the 80. It will not stay at the 80. It is going to move, right? You want it to move. It is going to move, okay? So it's because it's not going to stay at the top. So it's going to move. Now, I'm going to go down to my 5-minute chart, okay? I'm going to go down to my 5-minute chart. And on my 5-minute chart, the 5-minute chart happens before. It happens before the 15, right? It happens prior to, before. And so you notice that it is actually in a sale. Then I'm going to go up to my hour. When I get to my hour, that also needs to be in a sale. So because I know that that's in a sale, then I know I can go ahead and do my market execution and get my 10 pips and cash out. Now, for those of you all who are more advanced, right? See, we're already at, I mean, you got your 10 pips. This is GBP. Now, oh, stop loss. Stop loss is above the PSAR or below the PSAR for a buy. That's what my stop loss is. Now, as you begin learning support and resistance lines, you understand that you can trade to your support and resistance lines, okay? I can trade to support and resistance, and when you begin to understand that, I mean, literally, you could have grabbed this, and this went all the way down for like 63 pips, okay? It went all the way down for about 63 pips. So definitely had the opportunity to make quite a bit of profit. Is there a graph between the borders? The stochastic at 80. This in here, this is just for eyesight, like a visual, to kind of, you know, that's just that visual to kind of let you know, hey, in between that 80 and that 20, to kind of let you know that it's mainly just for that visual, because that's in there. It was forming a cup. It was forming a cup. We kind of been talking about this for the last couple of days now. It definitely was. If you go to GBP, JPY, you can kind of see, because JPY was kind of weak, that the cup did form, but all of them kind of look the same, right? Each and every last one of them looked the same, but JPY is the only one that continued. What happened was GBP got real weak, and that's why I kind of wanted to talk about the news this evening, because even when you have your technical analysis, right, that's where it's forming, it's like it just stopped, right? It stopped. And so you can kind of see where it's trying to reform it again down here. But if you look at JPY, it kind of, this is that initial drop. Let me go to the hour. You can kind of see it on the hour. You can kind of see where that dropped, and then where was it? Because it lost it. See, it lost it, and it was going back up on the hour, but JPY is the only one that closed that gap, and they all dropped off right here. All of them dropped off because GBP just got weak because of the fundamentals, because of what's going on. You know, the after Brexit, because of what happened after. But it hit a floor. It hit a floor right here. When you begin to understand your support and resistance and what happens, it hit a floor. And if I look left, you'll see that it hit a floor. So it hasn't been this low since December, right? And it actually pushed up, right? That was that nice little, when everything was happening and all those elections and everything else. But so it hasn't been this low. It's kind of stayed above there. So right now it hit that floor and it wouldn't push below it. And of course they don't want it to push below it. So that's what they are right now. So, but yeah. And so it kind of held. And so it's like it's trying to push back up right now. So that's where we are right now. So what I wanted to show you guys tonight, because I know everybody's not a scalper, right? Everybody's not a scalper. So it should be already up here. Yeah, this is it. So if you want to, like, I know instead of always trying to have to find it, if you are like maybe intraday, I know we've done a vibrata and a harmonics, and when you kind of want to use the tools, so let's say this is, which one? So NZD/USD, okay? And this is on the hour. And so you can trade off for different time zones. Now this one was called, of course this had to be called, so you'll notice that you'll see these currency pairs and they'll be called more than one time, right? So you want to kind of understand, like if I just scan through here, you'll just see like these will be called more than once, okay? They will be. So I just saw, which one was it? I saw one of them, but it was called more than once. So you'll see that, and you see I unchecked the 5 and I unchecked the 15, and I actually paused the updates, okay? Because I don't want it to keep coming through. So you can actually select the time frame that you want on here, okay? You can select the time frame that you want. So right now I got the hour, the 4 hour, and the daily check. So, and so just kind of going through here, and so you see Euro NZD, these Euros been kind of popping up, but you can, like I said, you'll see it called more than once. And that's the purpose of having both of these arrows on here. And I highlighted just one of them right before the call, but just in kind of looking at that, right, same thing. Blue line cross over the red. You can see this is an actual continuation when this one got called, right? So I don't want you looking at this and being like, well, my stochastic is not around the 80. Actually, it was, because my momentum started here with this initial drop, okay? So that's why, I mean, let me just change the color because we're looking at the one that just got dropped, okay? Because like I said, I know everybody's not a 10 pip type of person. 10 pip, cash out, 10 pip. You want to be able to kind of set it and keep it moving. So now if I go to NZD/USD and you see this call price, okay? This call price. Now, this call price is this line right there. If you notice what this call price is, that call price is a support and resistance line, okay? That's what that call price is. Now, you notice that my stochastic, my momentum started here, which was up here, came down, kind of hit a correction, which it always does. Anytime you hit a support and resistance line, you're gonna hit a correction and it's gonna pull back down some, okay? So it's gonna pull back down some, and it did, right? So you're kind of looking at where we are here. So this is a continuation from where it started up here. Now, if I go to my 4 hour for my confluence, what's happening with my confluence, right? My confluence is there. So it's there. If I draw my support and resistance lines, right? I draw my support and resistance lines, and that should be yellow. I just leave it there because this is the one that's caught, so it had the other color. So if I'd have drew up that support and resistance, guess what? We actually have a trade. So this is what was called or identified. Let me not say called because it's not a signal. It's just it's a potential trade, right? And when they identified that entry trigger, because that's really all this is an entry trigger. And that's why I said when you understand what the areas of value are with price action, which you have your moving average, you got your moving average, you got your trend, right? So I got my moving averages, I got my trend, and you know when you're sitting there looking at what those are and support and resistance lines, right? Those are my areas of value, and at each one of those areas of value, you always have what's called an entry trigger. Every time it hits one of those, and you notice that those support and resistance lines, they always flow through, right? Even on my, like even on a trend, okay? Even if I drew a trend, right? Even if I drew a trend real quick, where do those entry triggers hit? But I mean, are those highs, higher highs and those lower lows? What do they always hit? They always hit my higher highs, my higher highs. Let me just, so you can kind of, I want to know because I want them to stand out. Where are my higher highs? My lower highs on this one, right? If I put an X there, where they at? Each one is hitting on a support and resistance line. Each one hits. All of those actually hit on the support and resistance line. So when you begin to understand areas of value, and that's always the entry trigger, because guess what? I have one here too. I have one here too, right? I have them here too. I have them down there too. But understand that this one is actually a correction. So this is actually an entry trigger, but it's a correction. This is an entry trigger, but it's a correction. So do I trade that? Do I trade that, right? So you make that decision, because sometimes when we trade that, we're trading that on a 15-minute chart. So you understand what you're scalping, okay? When you're looking at this and you actually understand the areas of value, you got your entry trigger. So what the vibrato did is they identified an actual entry trigger. So what I just showed you, you don't have to go through and do all of that because the vibrato did it for you, right? So it identified an entry trigger. And now all I do is I have to come through here and I do the BYOB cash out to determine if I want to take the trade. So all the steps that I just took, you don't have to go through and do all of that because the BYOB cash out are the areas of value. So now do I take this, do I take the trade? After I do my analysis, check my time frame confluence. Oh, it's in a sell, right? I got my blue line cross over the red. I already know that it had already been selling. The vibrato will call it more than one time. It'll call this one. It'll call this one. It'll call this one because this is going to create an entry trigger. This is going to create an entry trigger. This is going to create an entry trigger. And I wanted to highlight that because we just been dropping currencies. We really haven't been pulling from here. We've been dropping currencies, but I want you to understand the value of the tool that you're utilizing. So, you know, you drop this here, it'll call one here. So you'll get 3 different calls on here. So you was like, my trade. And so you actually have this, so this is the one that we just looked at, we identified. That's why that was in yellow. So I do my time frame confluence. Oh, okay, it's there, right? and you know that I can trade this down to there. And then even if I go a step further and I look at my daily, right? Oh, that's the complete trend in the market. So you know you could have rolled this for a long time. But had my daily been in a buy, then you know it's a correction on the daily. So you just trading that one major thing. So right? That makes sense. Y'all with me? 555, you with me? Questions, comments, questions, comments. And just to paint the big picture, when you go down to the 15-minute, just so you can see what the big picture of what you're doing, when you come down here, you're actually trading. When you talk about a correction, like I said, this is an entry trigger. So you'll get that blue line that cross over the red and an upward momentum. I'll have my green candle with a flat bottom, and I have my PSR flip, and that's actually a correction that you're trading. So this momentum, so what you're actually trading is a correction, 15 pips. So I know someone asked earlier, what if I don't get in on the first candle? Don't take the trade. If you know you're trading a correction, that's why time frame confluence is so important. If you know you're trading a correction, then if you miss that first candle, don't touch it. You got to account for your pip reaction time, which is how long did it take you to get in the trade? If you know you're trading a correction, then you might just want to go for 5 pips sometimes. Because if your pip reaction time, some of you guys have a pip reaction time that's like 8, 9 pips. So if you know your pip reaction time, you know, if you know you have it's really not, it's just, that's just your reaction time. Like, how long did it take you? And if you know you have a long pip reaction time, then that's your trade. So don't trade it. Don't trade it that way. But if you want to, just go for less pips. Go for half of the pips, because that's a scalp anyway. So you don't have to go for 10 pips on a correction if you know you're trading a correction. So yes, it's 10 pips and cash out, but you don't have to do 10 pips, especially if you know it's a correction, right? But if I know I'm trading with the trend of the market, which would be this way, because guess what? We know it's gonna keep riding because it's with the trend. And that's why we do time frame confluence. That's exactly why we do that. So any questions or any comments? Because I know I kind of covered a lot tonight. I know we had some questions on the news. I definitely wanted to touch that, but we're going to come back to this. So this is not the last time you're going to see that. We're going to come back to this on Tuesday on these higher time frames, because we definitely want to start doing some setups on this. So I definitely told you I got you guys, because I know everybody's not a 10 pip and cash out. Definitely told you. I know everybody's not a 10 pip and cash out, but the foundation, you got to start from that point to understand the strategy. You know, that's going to get your feet wet, and that's going to keep you comfortable. But you can compound and start from there, or you can just grow where we set some trades and let them run. Keeping up, showing up is how you keep up. Keep showing up. That's how you keep up. So it's all gonna start making sense. Remember, we were never exposed to this information. So, you know, you got however many years you've been walking this earth, you know, we were never exposed to this information. So now you're filling yourself you're economically empowering yourself, right? You're filling yourself with information that's been hidden in plain sight, the information that's been hidden. And so it's going to get clearer and clearer every time you show up. But if you've never been exposed to it before, we're not gonna remove the veil in one visit. So even though I know it's not your first visit, I'm just saying in general, it will never be removed in one visit. So keep showing up, and it'll definitely, every visit will remove the blinders that society has placed on us. That is exactly correct. 4, 5, or 6. That is definitely the time frame confluence rule. Any more questions, comments? Got a few more minutes. I definitely want to open up for some questions tonight because I know we kind of covered a lot. So I want to make sure, you know, I want to have this open for questions. Oh, well, thank you. Thank you. Your stop loss. Let me see. Do I ever look for setups the night before? Yes and no. Oh, you're so welcome. You appreciate how you guys show how to set. You're very, very welcome. Okay, okay, stop loss and how do they translate? So if I go to, I'll show you one of my little tricks. The market is open 24 hours, 5 days a week. So my stop loss, I'm gonna grab one of these little tubes. Your stop loss is gonna be above that PSAR. So now, the thing is because this is a moving, this is what you call this is a parabolic stop and reverse. That is what this is called. It's called a parabolic stop and reverse. So it is a trailing stop loss is what it is. If you look at this, okay, let's look at this one. This one is a better example over here. Let's go to this one. Now look at this one. I'm gonna make this one a lot bigger. I want you to see it. So if you look at this one, okay, you notice how the PSAR touches the candle touches the PSAR, but it doesn't go outside of the PSAR. So even the wicks stay within the PSAR. So you want your stop loss, even though this one we wouldn't have been in this trade. I just want to show you how it works because it doesn't have a flat top. So, okay, it doesn't have a flat top. So now you want your trade. This is why we don't put it on there, because support and resistance, you always go above or below support or resistance, right? You always go above or below it. So I don't want it on there. Now, I'm gonna put it a little bit above that, okay? I'm gonna put it a little bit above that. So that's how you do your stop loss. Now, if I'm doing more than 10 pips, this is me, okay? And then like, let's say, let me show you something. I'll come back and answer that other part real quick. Where did it go? It's really not that many pips, okay? Just to kind of show you. I mean, look at how many pips is that? 5. So from the candle to above it is 5. So if I cushion it a little bit, you know, but if I'm doing more than 10 pips, then so what I do sometimes is I'll jump up a time frame. Okay, where did my thing go? What I'll do is I'll jump up a time frame and cushion it. And this is just me, and you don't have to do that. Okay, this is just me, and you do not have to do that, because I want to make sure I have room for those corrections. Now these correct. So I always trade with a stop loss, but they correct. And you notice that when you hit this, okay, when you hit this, you're going to get a correction. You're going to get a correction. And then it's going to come back down. So it's going to tap on the line and it's going to correct. And you see this is where the PSAR flips and it comes back around. But if I go to the hour, if I circle this for you, right? So circling that, if I go to the hour, right, well, what I just circled, look where my PSAR is. And that doesn't do all of that. So you don't see all of that. So, and my PSR is above it. So I can just stay nice and smooth outside of it. So that's why I go up a time frame. That's why I do that. So now, what is, okay, just a moment on that other question. What is a PIP? Have you been through the academy? That's the movement in the market. And then how do we quickly determine a lot size on the stop loss? Your lot size is determined by, I'm gonna ask, have you been through the academy as well? Because your lot size is determined when you set your trade. The PIP is the movement in the market, and the lot size determines how much each PIP, the value on the PIP. So, and it's not the lot size, it's gonna be how many PIPs. No, you're gonna determine your stop loss. Everybody determines their own stop loss. So like your stop loss goes above the PSAR or below the PSAR. So when you're setting your trade, you'll determine that. And that US 30 trade is just in a correction. I mean, that's why I tell you guys, if you take it, you gotta be able to hold it and correct it. And you gotta be able to trade with no emotions, and you gotta be able to set a stop loss. So you just gotta be able to. So you had, and once again, that's fundamentals though. Exactly. So the fundamentals is the correction, and it's gonna correct itself back. You had the president speak, and you had the Speaker of the House speak today, and so those are the fundamentals that will balance it out. But then it bounces back. The market always corrects itself. Enter the trade and walk away. Set your stop loss, and your take profit. And another thing too, whenever you enter a trade, you always enter a trade, your stop loss should always be based on your proper risk management of what you're willing to take that loss from, if that makes sense, right? So it's not about what I want to gain. Just like if you think about what we talked about on Tuesday, and if you were not here on Tuesday night, that training is uploaded to BYOB Challenge, the YouTube channel. So, but you always focus on the skill set, and that's how you build the wealth. Because I shouldn't be trading for, of course we want the money. So I want you to understand what I'm saying. We're here because we want to build wealth. We're here because we want to gain the income. But you build the skill set, right? You build the wealth by understanding that when I put a trade in, my risk management tells me that where I set my stop loss, I'm okay with, my risk management says I can walk away with that loss. That's factored into my risk management. You have that factored in. So you're okay with that. And so the emotion shouldn't be there to where, you can't handle what you're looking at. So if you have to build up to that, then trade something other than US 30. Or scalp it. I showed you all how to scalp it. A stop loss means stop the loss. Right. It means, and so like your risk to reward, so it just basically is like stop the loss. So you all, stop the loss. So you want to remain within, you're looking to gain wealth, of course, but you always want to stop the loss. Oh, you're so welcome. I'm so glad it's making so much more sense for you. When I get in the hour trade, when I get in a longer trade, yes. That's why I said we're gonna, next week for training for market talks, we're going to dive in a little bit deeper. I was just trying to expose you to it this evening. So we're definitely going to dive in a little bit deeper. So definitely going to dive in a little bit deeper. So we are definitely diving in a little bit deeper on those, because I know you want to scalp, but yes, you go to the lower time frame for a tighter entry. So if I know that 1 hour is setting up and that 4 hours setting up, you can go to that 15 and 5 minute chart and get that tighter entry, and bam, ride it out, set it and ride it out. Oh, and haha, I see who that is. That's your baby right there. You ready to take those trades. I know it. So exactly. That's exactly what that is. So that's exactly what that is. So let me see here. I want to, if I can pull this up. All right, well, ladies and gentlemen, as you can see, we have our Economic Equity Expo now, right? Economic Equity. And we are going to be in Jacksonville, Florida. We will be in Jacksonville, Florida. And I'm talking about on February the 22nd, our BYOB Economic Equity Expo. Be your own bank. I am excited. You definitely want to make sure that you are here in Jacksonville, Florida. So you see where to get registered, BYOBworldwide.ticketlead.com/Jacksonville. So as you can see, that this is hosted by Bishop Simmons. So make sure that you get registered. You have myself, Mr. Rogers, Dr. Byfoot, along with, this is, I promise you, don't miss this event. If you were with us the last time, if you were in Orlando, I'm telling you, this is going to be different. We're talking about your economic equity now. So we're going to show you how to build the wealth, create the wealth, going to show you exactly how to cash out. We're definitely going to expand. It's being expanded. So Jacksonville, right here in Jacksonville, Florida, I promise this is an event you do not want to miss, okay? This is an event you do not want to miss.